Hello everyone, thanks for joining us for another edition of Texas Insider TV, brought to you by the Texas Alliance of Energy Producers. I'm Jim Cardle. While the Texas legislature is entering its final month of activity at the state capitol, last week the Texas Workforce Commission announced that employment across the state had increased by close to 10,000 jobs. With the recently announced tax cut initiatives by President Trump and Congress, many are wondering what the outlook is for the economic future in the state and the nation. We're pleased to visit today with Marc Flaster, one of our frequent guests, who for decades has been an economic analyst and bank consultant for many financial institutions across the state. We're pleased to be able to visit today with Marc Flaster to talk about tax cuts, the Texas economy, and what the future holds for our nation's jobs. Well, Mr. Flaster, thanks for joining us today. We appreciate you coming in.
It's been my pleasure, as always my pleasure to be here, and especially in the warmth of South Texas. I left New York, it was 40 degrees and raining, and it took me over almost a full day to get here just because of the time and all the delays of traffic and airline schedules. And that was a burden. So
everybody wants to move to Austin, no doubt about it. And speaking of that, let's just jump right into some of your economic analysis if we can. I noticed that your last article we ran in Texas Insider and some of your analysis has gone into the subject of economic optimism in the Trump administration. Give us a thumbnail. What's your latest prognosis on economic optimism?
Well, I think the first thing you have to accept is that, as many people have already identified, that the country decided it had had enough of Obama. It had enough of his progressive ideas, putting other people first in front of the people who were first. Just didn't make a lot of sense to most people, and so they demanded and chose Donald Trump to lead the country in another direction. The stock market reaction was immediate. It took a big jump, and it's crossed 21,000 several times now, reflecting the fact that the promise of the things he's suggested or offered in his campaign is worth taking a further look at and consideration. I don't think, in my view, the country says, you have to do this. I think what the country has said, and forget about all the idiots on the TV and talking assholes, pardon my expression, is that they're willing to look at a new way or another way or change the way. And you may not get there, as I said in my market-wise piece. The promise is a lot more than the actual event may bring, but the country is supporting him, and whether the members of the Congress understand who their constituents are or not, they voted for him, and the Congress representatives better get their act together to understand who voted for the president and who voted for them. And many of the people were the same. And I think that will help a lot moving the agenda forward. It's going to change a lot of things. Some things will stay the same, but most importantly is that the attitude of the country has changed. It's changed to the point that they believe that there's something better happening. And the stock market is always an engine of forecast. It doesn't report what happens. I don't want to belabor the point here, but we have so many analysts telling you they reported earnings, they were up a quarter, down a quarter, they added, they did that. But the stock got there way before the earnings came out. And the stock got there because investors believed the company was able to generate a business and a business that was profitable, and they're willing to invest in that business. The fact that they missed their analyst forecast of a penny or two had nothing to do with the forecast of the stock and where the stock market or the investor was concerned in terms of putting money in and withdrawing. He was there as long as the company can show me they can do well and make money.
So in Texas, let's pivot from your comments there a little bit about the optimism. In Texas, we're so blessed and we've been so fortunate with our economic strength. Unemployment numbers came out the other day. I may get to that in a minute about the Texas economic growth, but tell us from your perspective, looking across the country and working with banks across the country, is the rest of the nation still in stagnation. What's the economic developments across the country?
Well, Texas is definitely blessed, and energy is a big piece of the nation's equation, and we are morphing, if you will, from fossil fuels to environmentally, let's say, sensitive fuels,
Okay.
Whether it be wind or sun, but solar. But the big thing is natural gas. And anytime you bring oil out of the ground, you bring up natural gas. Now, in the old days, I'm sure you recall, I know I did, when they showed the Texas oil fields or the Saudi Arabian oil fields or Iraq or wherever, you saw these plumes of fires going on at the end of these needles.
Burning off the
burning
gas.
off the gas, because nobody knew it had any value. Today, you don't see that.
Mm-hmm.
Okay, natural gas is now captured, and it is now being used to replace coal, which is the largest ingredient for energy production. And we're going out of the coal business. The whole world's going out of the coal business. The Fukushima was a very, very bad event in Japan, and that ended the embracement of nuclear power for Japan and probably for the world. And the immediate reaction was to put coal in place to produce the power, but now coal is being replaced by natural gas. Texas, I think when we last met, I mentioned to you that a Texas company called Cheniere had sent their first natural gas ship abroad. Came out of Corpus Christi. I was just down in Corpus Christi. Everybody knew about it.
Okay.
And it was everybody, it was a big party about this exporting natural gas. But that all the oil ports that were being built, Louisiana oil port and some others, to be imported oil, are now not being shifted to export oil, which is a big change that's happened here itself. But they're being converted to export natural gas.
And you're talking about liquefied natural gas.
So LNG
probably.
is now becoming a big export value to the U.S. And because when you bring up oil, you bring up natural gas. And the whole world now is looking and saying, if we go to any of these environmentally sensitive energy sources, they don't work all 24 hours. So if the sun is not there anymore, then we can't, the solar panel's not working, we have to have a sidebar of a power plant that's going to be run by something, and natural gas is the something. And I think the largest country with the largest production of nuclear power is France, and France is going to convert to natural gas and will probably provide it.
Really? How about, though, the economic numbers? If you look in the Midwest or you look in the Southeast, are their economies rebounding? Are they growing like we've seen here in Texas?
I think that what I mentioned earlier, that there's a large dynamic that's going on. We went through a period where the oil prices came down very sharply, and they came down to $30, $25, $30 a barrel. There was a real estate collapse, homeowners real estate collapse. Forget about commercial real estate. That affected an awful lot of people. It affected banks. It ended up Congress passing a law that none of us like, and that the struggle to live under those constraints has been very difficult. And the Obama administration put in place so many constraints on emerging from this that the progress was beyond slow. At the same time, we have a country and a world that is developing very quickly in this technology field of information and resources, new ways to manage information, new ways to source product, new ways to deliver product, particularly we've seen in the retail side, and that has changed an awful lot, or is changing an awful lot of the struggle of the economy to expand. So on one side you have an economy that is figured out how to live under these new rules. On the other side, it has new things it has to deal with, and those new rules don't accommodate the change that's occurring. So in my view, the economy is not improving. The stock market is having a great time on the promise, but the economy itself is struggling to stay somewhere between 1% and 2%. Now, people may say, well, the president says he wants 3%, but I can tell you this, that the compounding of interest at 2% is plenty to drive this economy and to make our economy and our world a better place for everybody. So the power of compounded money and compounded activity is very, very strong. It occurs in pockets. Now, just an example, as we mentioned earlier, that during this low interest rate period, maybe we had some loss of employment in Houston because of all the energy companies that were struggling during that period. But the building activity in Houston expanded. And so not only did you have buildings that were losing tenants, but you had new buildings going up that were looking for tenants. So right now, Houston has got some problems downtown in just overbuilding. You have more space available than you have demand for the space. I assure you that people will find Houston and it will get absorbed over time. But that's going on a lot of different places. The shift of manufacturing out of the suburban areas. If you go and drive around in years past, the factories make noise, they make smoke. They were outside the cities. Those factories are now being converted to art centers, hospitals. Don't ask me what else. You name it. And those same companies have moved downtown, and they're now occupying downtown space, and whether it be Pittsburgh or Chicago, or New York, for example, for sure, and Austin here, very much Austin, is you have a whole dynamic of new companies that are more tech orientated, and they're employing a whole new set of people that are developing business and industry, and so the downtown is growing, and the suburban areas are not, and actually they're losing a lot of their population.
You mentioned the Obama administration. I want to delve into the recently announced Trump tax cut. First, thanks folks for joining us for this edition again of Texas Insider TV, brought to you by the Texas Alliance of Energy Producers. We're visiting with Marc Flaster, a Texas bank consultant and analyst. Let's get into the overall dynamics. President Trump has recently announced a tax reform package. Our own Congressman Kevin Brady from Houston, chairman of the Ways and Means Committee, and Paul Ryan, they've been talking about it in the House of Representatives. What is your outlook, or what do you see the impact of even the potential for tax reform on our economy?
Well, let me say one thing here that may be a surprise to a lot of people.
Okay.
And that is that all the talk here about regulatory reform, overburden of the banks, and the Dodd-Frank Act, and how narrow-minded it is, and the struggle for banks to live under this heavy burden, pales in relation to the positive effects of a lower tax bill.
Really?
Now, you lower the tax rate, and all that goes away, because it means that whatever dollar you can make, you're going to keep a lot more, and that is a much bigger quadrant than a few dollars you might save by figuring out how to prepare a reply to a executive oversight question. So the relative to the world, our tax rates are higher. That doesn't mean that the world's tax rate being lower is better than ours. They tax differently. People work under a different system than we do here. But by changing some of the things that would upgrade more to, we'll say, to the 20th century. For example, the whole idea of, which I'm sure will be included in this tax bill, is the item of investment write-off. Okay? Today, if you make an investment as a business, you have to then amortize that investment over the life of the product that you're assigning that investment to. The building's going to stand for 30 years. We're going to amortize that over the time. The product that we have, a hammer or nail or whatever it is going to have some life to it. We're in the intellectual property business. That's what this whole country is being generating, is tremendous amount of intellectual property, and a lot of that doesn't survive till the morning sunshine. So if you are required to take your investment and write it off over some time frame that would outlive the product that you've developed in intellectual property, then you're basically going to end up driving yourself out of business.
In this day and age, with some of these technology products coming online, you don't have the chance to, as you're saying, amortize them or live through a business cycle. It's happening so fast.
It's happening so fast, and you don't even know if the competition is going to supersede you before you get a chance to fully test it. So that's a very positive instrument that should be in. I'm sure it's going to be in the tax bill.
Okay.
A lot of concern was our corporations, our world corporations. They do business everywhere, and the U.S. tax system discouraged them to bring the earnings back to the U.S. to help support more development and expansion of their own businesses. So they had to leave it over there.
Mm-hmm.
So if they leave it over there, what do you think they did with it? They built more over there.
Mm-hmm.
So you say, well, why aren't our companies building more here? Well, because you're discouraging them from using the money that they've earned to build the structure they need to earn more. So they said, well, we'll just figure out how to work with those people and we'll build more over there. Well, if we can bring all that back at some preferred tax rate and encourage that will have tremendous benefits. One of the big benefits is that those that seem to know, and I think that some of the comments are fair, that some of that will go right to the shareholder. They're going to increase the dividend, they're going to do share buybacks, and so the stock market immediately reflects that, the promise that this can occur, and they say, gee, if my dividend is going to increase, then I should be buying the stock. So there comes some buyers to the stocks. Thank you again.
Folks, we hope you'll tune in for the next edition of Texas Insider TV, brought to you by the Texas Alliance of Energy Producers. Remember, you're either an insider or you're not.
Or you're not.
I'm Jim Cardle. Thanks for joining us.